Good morning. Hello, everybody. Just let me know, please, in the chat if you can hear me and see my screen. We will get started momentarily. This is Jeff. I am by myself today. I have no John, no Kara, no Emily at the moment. So I just want to make sure I did this okay. So if you could let me know in the chat that you can hear me and see my screen. We will get started in about 1 minute here. All right, thank you so much. Okay, perfect. You just never know. This is the first time that I've had to do the whole like streaming setup, Zoom, connecting to the website, everything. So, all right, good morning, good morning. But my clock is 8:29 a.m. Did start the stream a second early just to make sure we got through that initial stuff. So we'll get started here in about 1 minute. Good morning. Okay, it is 8:30. September 29th, 2025. My name is Jeff Wood. I am here by myself today, and we'll get through this. I don't have the numbers of how well Traders Reserve and different services did this past week. So if you're looking for that, we'll cover that in another session. I'm just going to get through a couple of different things, important points of what you should know about in the week ahead for trading, and then we'll get you out of here in about 30 minutes or so. I don't actually have it as a slide because this just came up a few minutes ago, but a quick scheduling note, we will be dark on Wednesday. So no breakfast club on Wednesday. What is that? The 2nd? October 1st. October 1st. No breakfast club on October 1st. We'll be back next Monday. All right. So with that, let's get through what happened last week in the market. Well, there was the personal consumption report, PCE report. It all talks about disposable personal income, how much people are saving, how much people are spending, all that good stuff. And the important information here is that spending with tariffs and everything else, and with the job market sort of where it is, there was nothing outlandish in the report, which is really kind of what helped the market be boosted a little bit on Friday. Now, there's still some long-term trends that aren't necessarily good. So this is this black line is personal savings as a percentage of the disposable personal income. So if you have a lot of, after you pay all your bills and whatever else, you have disposable personal income. Well, how much of that are you saving? Well, since April, not that much. It continues to go down. And then we also have outlays, which is how much money are you spending. That's actually been fairly even. There was quite a bit of non-spending. In May, we had April tariff woes, so everyone was kind of holding on. But spending has kind of picked up over time. Now, that could be a couple of different things, and we can pour into the data in just a second and really try to understand this. But part of this is the amount of money people are spending might be going higher because that is, as prices increase, prices in goods and services increase. That means you have to spend more money on goods and services. But what we're also not seeing is, this is why everyone keeps talking about the resilient consumer. The consumer continues to spend money. We're not seeing this like drastic pulling back from from spending, which would hurt company earnings and everything else. You can also see that the blue part here is disposable personal income, and that, again, that's what I was kind of talking about, is that's been relatively flat. And so, yes, people aren't spending, people are spending more, they're not saving as much, but your disposable personal income is relatively the same month over month. And that's okay. That's what we're seeing is job market may be a little bit, wonky, but it's stable enough. It needs maybe a little help from the Fed, but it's stable enough. We're not seeing this like mass layoff, mass recession, whatever, all that sort of good stuff. So, or not good stuff, but anyway, as far as what is really driving consumer spending, we see actually transportation services, food services, financial services, recreational services. And so the sort of key word here is services. So of goods and services, we see inflation tends to be more sticky in the services industries more than the goods industry. So, which is a little bit weird, because you think with tariffs and everything else, you think the cost of goods are going up, and yes, they are going up. Let's not deny that, but it's actually the services part where people are spending their money. And so if that part doesn't sort of even out, then we're going to have that sort of sticky inflation that the Fed doesn't want, right around that 3%. Obviously, the Fed wants inflation down at the 2% level. And so they're going to have their work cut out for them. So that's just a little bit of what kind of came out last Friday. Let's talk about the week ahead, though. We do have some jobs, the JOLTS job openings on Tuesday, pending home sales today. Again, the ones in orange are important to know. The ones in red, I think, are the more market drivers. But we're going to talk about this in a second, but it's that October 1st pending government shutdown. That's kind of the important day that's going to drive volatility. And then also Friday, because we do have unemployment rate, we have non-farm employment change. So some of those reports on Friday will depend on if the government is open, and I'm going to talk about that in just a second. So I think if you're trading those 0 DTEs that everyone loves, or even short duration trades, I would look for volatility to increase on Wednesday, October 1st, and Friday, October 3rd. And otherwise, just be aware of the times of when these reports come out if you are trading short duration trades. All right, so I know this isn't a pretty slide, a lot of words, all that good stuff, but let's talk about the political side of our government shutdown, one, because it is a question that keeps coming up in the chats in various services. So, are we worried about a government shutdown? Well, the political side is we have an October 1st AM, October 1st AM. I think it's 12:01 AM if there's on Wednesday. If we don't have some sort of settlement, then the government is shut down. The longest shutdown we had was 35 days, happened back in 2018. The second longest happened during President Trump's first term. The important part of that bullet is to know that he is not afraid of having the government shut down. Again, this is more on the political side, whether, depending on what side you're on, you're going to say, this is good, bad, and different, whatever. But gotta deliver here both sides. So the shutdown would allow President Trump to fire federal workers. There's a talk about in previous shutdowns, they've always been furloughed, which back pay would be then granted when the government opens. There are some special exemptions where you can actually just fire federal workers. So that is one of the things that's kind of on the table that would help actually reduce government spending. Although there's part of why I don't think too much into this bullet point, but could be wrong. But there's a lot of information actually now where the government is trying to hire back workers that were hire workers back who were let go from the original DOGE cuts. So I don't really think that this is all about the president trying to fire workers versus furloughing workers and all that sort of stuff. But that is something that is certainly on the table, and you'll hear in various news stories. The other thing is that if the government does shut down, There is precedence for the executive branch to gain more powers as the government is shut down. Things still need to get done. So the executive branch does have a little bit more, they're able to do more different types of things, but more things as the government is shut down. Is that really why the government's being shut down? No, I don't think so. Really, the fight is about July's one big beautiful bill. It reduced Medicaid for low income Americans. The federal government has been spending about $638 million. That was in 2024. They spent $638 million on that program. That is what the Democrats are fighting for. Republicans are saying, hey, we don't want all of that, in the bill. This is what the one big beautiful bill removed that, so we don't want that back in. So that's kind of what the fight is, and we'll see what happens today. I know there's negotiations going on today, but that's all the political side. That's all the. Let's talk about what it means for traders. So the government shutdown means that the jobs data won't get released later this week on Friday. That's what I alluded to just a second ago. So no jobs data means that the Fed won't know if they can cut rates more, because they won't know what the job market is doing. And the Fed has said multiple times that they want to review the data. They're making data-driven decisions and all that good stuff. And so the rally that we're having, and I know, Friday can't really call that a rally, but I'm going to call it the broader based rally that we're having, is based on the idea of continuing to cut rates. And so really traders, all of us should be worried about a government shutdown. So the question that keeps coming up is, what do you guys think about the government shutdown? It's not the government shutting down that is a concern as much. We've traded in 2018 when the government was shut down for 38 days. We've traded during President Trump's first term when the government was shut down. It's not that I'm concerned with. The concern that I have is no data maybe equals a pause in the rally, because if the Fed says, hey, we don't have enough data to make a decision, then that just delays the rally. It delays the decision to cut rates. If it delays the decision to cut rates, then I think we see a pause in the latest rally. However, now traders aren't necessarily the Fed, so the traders might say, hey, if layoffs do come as a result of a government shutdown, that means the Fed has to know. I mean, it's going to be, public knowledge. It may not be in a fancy report from the government, but the Fed will have to know that there's going to be mass layoffs in the government, and so the Fed has to cut rates. So, that's kind of the debate that we're having this week, and we'll obviously know more later this week. But again, it's not the government is shut down, all these services are going to be shut down. What's that going to do to trading? To me, it's more about the data that we don't see, or how the Fed reacts to layoffs. That's really the story for government shutdown for me. Anyway, so last week we looked at some momentum by EA, which is Electronic Arts. And I thought, and I said last Monday, it's based on seasonal sales of the Madden football game series, because the NFL season started 3 weeks ago. Madden football, which is published by Electronic Arts, the video game publisher, sales have been going really well. So last week we looked at the 24 October 175 by 180 debit call spread, saying it was going for about $2.15 or so. And I said, hey, as long as it trades above $180, which it seasonally should, there's momentum. The 10 periods crossing above the 30 period moving average. So we have some momentum going on there. We have some seasonality going on there. So I said, as long as it trades above $180 by October 21st, you are good to go. You'll make the max profit, which is the width of the spread minus the debit that you paid. So you had a chance to double your money. Well, EA is now trading at $193 because there is takeover news from Saudi Arabia's public investment fund. They are looking to take the company private. EA seems very open to the news of being bought out. So why is all of this happening? Okay, that's the trading stuff. So if you were in that debit call spread that I mentioned last week, you should be sitting in a nice profit. Hopefully you guys are. So the reason why all of this is sort of happening, Saudi Arabia's public investment fund is looking to gain influence as the global entertainment industry sort of hub. They're also, a little bit lesser known, but there are so that's why they heavily invested into Take-Two Interactive and Nintendo already, because they do want to be sort of this global entertainment industry gaming hub. They are also looking at, so this is kind of, it's funny that we're all like focused on TikTok, but yet we don't focus on other areas. What comes along with owning Electronic Arts as a publisher is you get user data. Data is the new gold rush, and it has been for the last, really 10 years or so, or 20 years even. And so with gaming systems, yes, it's not quite as much as TikTok on mobile devices, but you still have to log into servers. You still have to accept user agreements that basically shares your data with the NFL. It shares your data with FIFA if you're playing one of those soccer games. And so, other companies, whether they are in other countries or not, but other companies are looking at how do we acquire data. And so they're now going into the video game industry, looking at buying out other video game companies for access to data. So it's just interesting, and we're starting to see this across the news wires. It's not that much of a public story, but we are starting to see this a little bit where there's interest of other countries in investing in either buying American companies to either move around tariffs or to diversify investments to make up for lost revenue. And so we're seeing some, and this has really been a trend for a while, so I don't blame this all on tariffs, but we're seeing foreign investments in real estate. And again, we're starting to see mergers and acquisition news wires, start buzzing a little bit with rumors of these, foreign investments into American companies. So we'll see if that plays out more. But anyway, really the point of this slide was hopefully you got into this trade last week, because that you're sitting pretty now. I don't think that this is going to go more than this 190-ish area. Can't tell you what to do. I'm personally getting out of this one, even though, yes, there's still a whole month ahead. But you just have to watch this very closely. If the deal goes south, then the price goes south. It is valued at a certain valuation, which is going to put a limit on how much the stock is going to go higher. So it was a nice 1 week pop, but do with that what you will. All right. As far as the overall market, one of the things that that I like to do is look at the EUSA ticker, and that is the equal weight index for the market. And so over the last month, the EUSA, which is all US companies equal weighted, it really hasn't done anything. And in fact, it's down by 0.16. So it's essentially flat. And that's okay. We kind of knew that September can be a rough month. It's a 50-50 month, but when it's rough, it tends to be pretty rough. So it's no surprise that we're sort of consolidating. The good news is we haven't really had a major pullback, but this is just sort of like a month-long consolidation as far as broad-based stocks go. So what we're kind of looking for is either break down or break higher out of this consolidation area. But on the short term, what you need to know for this week is I would look at counting back about 5 days. If we can start trading higher, so yes, we had a really nice Friday. But we traded lower for 1, 2, 3 days in a row on the USA. We did have a nice Friday. So what I'm kind of looking for is, if I want to go, and start looking at bullish trades, I want to know that the market is trading higher than it was a week ago. So I'm going to look for this to see where we are from here and 5 days ago. And if we're trading above 5 days ago, then start adding on some bullish positions. But it's important to also kind of take a step back and see from a month, we're really just kind of flat. But flat in September, I'll take a flat September any year. So what has been moving up? If the EUSA is kind of flat, then what has been moving up? Well, it's actually an equal weighted index of the NASDAQ. So the NASDAQ overall is really been moving the market higher. And once the um, initial rate cut, was sort of planned, announced, happened, all that sort of stuff, then we saw technology stocks kind of lead the way. And so whether it was equal weight or just NASDAQ 100, doesn't really matter. Point being that some of those financials, some of the technology, some of those things have really been the ones leading the way versus just the equal weight of all U.S. companies in the stock market. Anyway, so that's not the right slide for is the selling over. Well, is the selling over? So the percent change, this is percent change. So there's Electronic Arts gained 14% on the takeover news. But overall, these are S&P 500 companies. And you can see Friday, we had a really good day. We had PCAR, CDW, Lamb Westings, Take-Two Interactive. Hey, look at that, Take-Two Interactive, Electronic Arts, both video game companies. So Tesla, though, what I wanted to show on the slide was that look at, where's the Mag 7? There's no Ford Motor Company. When's the last time Ford Motor Company made the top percentage change gain in the S&P 500 in the top 20 for a day? No offense to Ford, my dad worked there for 30 years, so I'm not anti-Ford or anything like that. But the point is, aside from Tesla, where's the Mag 7? There's no Mag 7 in the top gainers for the day. So that's kind of not necessarily a bad thing if we continue to see this rotation into other stocks, because as much as the Mag 7 do control a lot of the market, it'd be nice to see some of these other stocks sort of lift and gain momentum, so we see a broader increase. However, so this is what from Friday's data, we saw 1,400 advancing issues. So that's 75%, which is nice. However, look at this. We actually still had more net new 5-day lows than 5-day highs. We had more net 5-day lows on the NASDAQ. We had more just barely net on the NYSE ARCA. So what is interesting about it is, yes, we had a good Friday, but we're still seeing more net. This is out of 5,242 stocks. There were still more net new 5-day lows, even though 75% of the market was going up. So fascinating sort of mixed data. I know futures are pointing to a higher open. So if that is the case, then we'll see these kind of flip to green. And that's sort of another indication of market breadth that I like to see before I start doing too many bullish trades. Is I want to see more net 5-day highs than 5-day lows appearing. So we also, every week, we look at the number of stocks trading above the 20-day moving average. The good news is, yes, we had some selling. We even talked about this last Monday, that we might see a 2.5%, 3% little drawdown, which is essentially what we were at last week. The S&P 500, only 51% of stocks trading above their 20-day moving average. So there's plenty of room to go. This is not oversold. This is not overbought. We're just right in the middle, 51%. We did talk about this last week. We said, hey, energy is looking like a sector that might go up. I said I couldn't really find a trade on XLE, the broad-based S&P 500 ETF for energy, but I said, energy has a seasonal pattern. I even gave you a trade idea for energy. And look at that. Energy ended up finishing the week with 91% of its stocks trading above the 20-day moving average. Utilities, 87%. So those two, not saying it's going to happen this week. Sometimes this takes a week or two to kind of get through. But if you're as the phrase goes, if you're seeking alpha, if you're trying to find where the new money is going to be hiding out, I would say utilities and energy, you got to really find those right stocks that are going to lead the charge, because overall as a sector, that's getting a little bit overbought for me. Materials, it's one to watch at 30%. I like to watch them when they fall below 20%. Healthcare a little bit, and then consumer staples. Consumer staples is really more about if the market's going to be defensive, then look for consumer staples. Right now, 30%. It's getting into that sort of watch category. There are certain stocks to watch, but overall, for the bullish case, I would say we're not overbought yet. With only 50% of the entire S&P 500 trading above their 20-day moving average. It's a mouthful. All right, so we talked about energy last week. Energy did rise about 5.3%. Unfortunately, there was no good selling option strategy on XLE. You could either have bought the stock, you could have, bought a long option on that one, but overall up 5% last week. And Fang was the one that I mentioned. We talked about this last Monday about buying a 140 by 145 call going for about $2.40. Same thing. Max profit is the width of the strike minus the debit that you paid. So you're looking at a potential of making $2.60 or 100% return on your money. That is currently trading at 148. So it just needs to stay above 145 by October 17th for you to achieve your max profit. So one to continue to watch, or you can exit now after 5 days for some profit there. And then market sectors overall, over the last 5 days, we all experienced it. We had the 3 down days. There was, talks of, is this the market top? Is this whatever? We don't know, but the S&P 500 finished the week just slightly lower. Utilities, big gainer. Energy, big gainer, as we just talked about. But that's also what's pushing that into a little bit of that overbought category. There are certain stocks that in energy that are going to continue to run, but again, if you're looking for kind of a sector to move into, I would say that the run has already kind of happened on those 2. So that is it for the week. I don't actually have a trade of the day. We're still in a couple of trades from last week. So if something comes up, I can always post it in the chat, but that's really it for this week. So again, just as a reminder, I don't have a slide for this, but no Breakfast Club on Wednesday, the October 1st. John and I both have scheduling conflicts, so we'll be back for Breakfast Club next Monday. If anyone has any questions, I'm happy to answer questions. Otherwise, we'll see you in various rooms. We have AI2 room, I think later today at 4 o'clock. We have MTC, Income Masters, so should be a full day of trading. So I'll see you in one of those rooms, and I will talk to you guys all later.